One of Australia's most successful property developers, Lend Lease, which was involved in the building of the Sydney Opera House and the 9/11 Memorial in New York, is undergoing a massive restructure that will see it drop its international operations. Business Editor Ross Greenwood is with me now. Ross, this move could come at a big cost.
It'll come at a very big cost, there's no doubt about that, Kenny. In fact, the company today says it will write down potentially more than $1.4 billion even in this financial year as it tries to undergo this transformation. But there's been agitation from shareholders for months and months now on really what has been an abject lack of performance from its share price. But Lendlease is, as you say, one of the most sort of noted property developers in the world. So you talk about the Opera House, but you even can talk about Australia Square, one of Australia's original skyscrapers. You can go to many of the buildings in London, including even the refurbishment recently of the Tate even galleries that they've got on Millbank there. But so many more housing developments around the world. But as I say, it's the agitation of shareholders which has really led to this, including Tanara Capital. Now, one of the most canny investors in Australia, a guy called John Wiley. We spoke to him in April. And really, this, I think, is one of the real catalysts for what's taken place today.
You know, they're a relatively small, mid-sized Australian company. And we believe that Lendlease has become, over time, it's become unfocused in terms of where its real competitive advantage is and right to win. And we believe it's operating on 4 continents in 3 different industries, in a whole range of quite disparate business activities in many respects, has not been a formula for success, and it shows in the share price.
So as you say, Ross, this agitation by the shareholders, has it forced the management to change?
Oh, there's no doubt. And certainly also the chair of this company has already announced he will resign and step down later this year. There's been enormous pressure on the chief executive, Tony Lombardo, as well, who we'll speak with on Business Now later this afternoon. But the interesting aspect of this is the company has also decided that it will buy back $500 million worth of its own shares. So here is the Lendlease share price over 1 year. And this gives you some sense as to why the investors are unhappy. So it's down 17% over the course of 1 year. Have a look at it over 5 years, though. Long-term investor like this, down by 55%. It really has been smashed up in the post-COVID, really malaise that's taken place in the property industries around the world. We know that with the collapse of so many construction companies here in Australia. Another one fell over today. But I want to show you the Lendlease share price today after this announcement. Here it is, up by 8.8%. And so there's been a real pop in the share price today as a result of that big buyback, but also as a result of this refocus back in Australia. They will keep their Asian investment division. That's pretty much all that they'll keep from their global operations, and already some of those operations in the US and the UK have been sold.
OK, so what about the markets here today, Ross? It was pretty choppy last week.
It was pretty choppy, but it's going to be pretty good because the Wall Street markets on the weekend were relatively strong, and so that means it's been translated here. The thing that people will be watching for this week is going to be, no doubt, the monthly consumer price index or inflation numbers that come out on Wednesday. But if we have a quick look at the ASX 200 right now, what we can see is that the market up by more than 0.5%, 43 points, and it's happened really pretty much from the opening. The Australian dollar, which has been relatively strong in recent times, down a touch this morning, 66.25 US cents. The other one I want to show you is long-term government bonds this morning. These are one of the keys to where interest rates, the view of interest rates is they're just easing off a little bit from 4.3%. They're the key to perhaps the market's mood as to where the next move in interest rates here in Australia will be.